Welcome to MJ BizCon. Happy to be the first talk of the day and of the week. I'm Sunshine Chapman, the president of ERC Provider. And
I'm Scott Mann. I'm the COO of ERC Provider.
So we're based in Orlando and Utah, and we've been traveling the country all year long telling everyone about the ERC. Mostly we speak with CPAs and tax preparers and finance professionals to kind of explain this to them because it is a very complex thing. But the really exciting thing that makes us so happy to be here is that a lot of people in this industry don't know about this, and it's the one actual COVID relief program that is available to cannabis-related businesses. So we're going to kind of dispel some of the myths and explain it so everyone can really get it. And we are here at booth 700. We have a team of 9 professionals who have done, together with our partners, over $5 billion in these credits in the last year. So we are the biggest in the nation, and we make it a really clean, easy process for our clients, and we'd love to help more businesses in the cannabis industry. So we're going to kind of go through and explain a little bit about what the ERC is, and we're so happy you all are here. So we do consider this the biggest missed opportunity in cannabis, just because PPP was not available. And so a lot of cannabis businesses, you can't get all the regular deductions, you can't do a lot of the things that other businesses can. But in this case, it is different. So we have good news on that front for you.
So if your cannabis business experienced revenue decline or supply chain disruption or shutdown impacts like a reduction in capacity for like travel restrictions, then you can likely qualify for the employee retention credits. So this is very, very important for everybody to realize that you weren't able to get a lot of other opportunities. This opportunity is massive, and it's right in front of you.
So people always ask us first off, I don't think I can qualify. Usually other people say because I didn't lose revenue. But not only that, but in cannabis, people think they can't get any kind of tax credit because of 280E. This does block cannabis businesses from regular kind of deductions and grants and things, but it's based on income tax. So the ERC is not an income tax item, and it's a payroll tax based on your 941s, not your regular returns. So it is available to people who work in the cannabis industry of any type, and we have successfully claimed it and received checks from the IRS for several cannabis-related businesses. The biggest thing is you do have to have W-2 employees, so not 1099, but W-2. And that's what it's all based on, is how many employees you have that you kept working during the pandemic.
And I will also add that this isn't just for cannabis businesses. Obviously, this applies for any business in the country with W-2 employees that was impacted by the pandemic. So, and let's talk a little bit about what this program is and its history. So it started off as part of the CARES Act. So every senator in our country voted for this act. It was right at the beginning of the pandemic. It was essentially a world-changing event. And this act was supposed to be a big component for keeping our economy alive. And so as a part of that, everybody has probably heard of PPP and maybe has heard of EIDL. These were programs that helped keep businesses alive when they were suffering greatly from government shutdowns. The ERC was run a little bit different. It was not run through the SBA like the PPP. This was run through the IRS, and it was much more complicated. And in the beginning, not every business qualified for it. In fact, very few businesses qualified. Because in the beginning, when it rolled out, if you got PPP, you did not qualify. If you did not have a loss in revenue, you did not qualify. However, what happened was nobody ended up qualifying, nobody ended up getting this money. The Senate looked, like, hey, we're not getting the help out there to the people that we need. And so they made some very big changes late last year. And so the policy amendments changed it so that even if you got PPP, in this case, nobody in the cannabis industry did get it, but this still applies for all businesses. But in this case, if you ran a cannabis business, you can still get the ERC, and even if you did not have a loss in revenue, you can still qualify for the ERC. And we are estimating that about 80% of businesses can qualify for this massive credit.
So it is big. It's $26,000 per employee. So somebody who has about 40 employees would receive about $1 million. It comes out to around 70% of the total payroll paid. So it's actually more than you ever paid in the taxes to begin with. And it is reduced by PPP. So other businesses that got that are going to have a reduction in what they can claim. But because most cannabis businesses didn't get the PPP, they can still get this. You'll get the maximum amount. So you'll get way more than other businesses would get. So it is definitely worth looking into. And there are 3 different ways to qualify for it. It's revenue reduction, supply chain disruption, and other shutdown impacts. So we're going to break those down for you a little bit.
So we'll start off with revenue reduction. This one is black and white. This one is very straightforward. But basically, in 2020, if you had a 50% reduction in revenue compared to 2019, then you will qualify. And in 2021, if you had a 20% reduction in your revenue compared to 2019, then you will automatically qualify for these credits.
So one example of a business that we qualified together is an Orlando-based security firm. I know there's a lot of people working in security for the cannabis, and this one had 65 W-2 employees. They qualified and received their checks 3 months later for $1.4 million. They qualified based on revenue reduction because a lot of the businesses, they were monitoring office buildings and government buildings that were shut down. So they were like, hey, we don't need you anymore. They just stopped working. So they didn't make any money. So they had a massive loss, and we were able to qualify them based on their revenue reduction.
So the second one is supply chain disruptions. Under supply chain disruption, this one is relatively straightforward as well, but basically if the government shut down manufacturing, and that impacted the supply chain of things that you needed that you couldn't get to run your business, things that affected your operations, and it had more than a nominal impact, essentially more than a 10% impact on your overall operations. And if you didn't have a reasonable replacement, then you will qualify for these employee retention credits.
So this one is really, really common in this industry. People couldn't get packaging, certain products, receipt tape, just anything you use to operate your business, whether it's shipping related, anything that you tried to order and couldn't get on time reasonably, you can qualify for this. And it doesn't have to be one thing that equals 10%. It can be an addition of this and other impacts that total a 10% impact on your company. So one of our early clients was a dispensary in Maryland. They had 15 employees. They qualified and received their checks 3 months later for $317,000. And they did it based on supply chain. They had trouble getting a lot of product that they would usually sell, and a lot of the packaging was unable to be shipped to them due to these shutdowns. So there's been huge delays and shutdowns in places like Detroit and a lot of the other California, New York. So those things have created this continual cascading supply chain problem that's still going on, but now the good news is it can actually get you money for the impact on your business.
And the third way that you can qualify for these credits is with a full or partial shutdown. Did the government shutdown have an impact, direct or indirect, on your business operations and revenue? And basically, there are many different ways that this could have occurred. One of them is a reduction in capacity. Examples are restaurants, obviously, where they could only have about 50% of the normal people in their business at any given time. So that's a reduction in capacity. Reduction in services offered. And in the cases of dispensaries, not being able to have as many people in the location at any given time perhaps caused a reduction in the amount of people that could get served at any moment. Inability to access equipment. This is common with certain operations, especially where there's vapors being shot through the air, for example. So having to shut down certain things that could have had a very significant impact on different types of operations in the cannabis industry as well. And then travel restrictions as well. So if part of your business was traveling, if it was conferences, if it was meeting with clients in person, if it was, there's many different ways that this could have had a more than 10% impact on operations. which would create a very clear qualification and potentially represent a significant amount of tax refund money going back to your business.
And we love the travel restrictions one because anytime we go to a conference, everyone who has a booth probably used to sell their product at booths by traveling and going to a trade show. Trade shows were canceled due to restrictions on crowd sizes, so they couldn't get their business that way. So travel restrictions for a lot of different ways of doing sales will qualify pretty much any exhibitor here. So we're sending our teams all around to all the booths to let them know that that's how you make your money, is going to shows. You couldn't do it for 2 years, and now it can actually result in money. So this is one of our clients is a financial service business. They had an office that people used to come in, and often would get people coming just by walk-in where they were located, and they had to close it down. Of course, California just reopened this year completely, so they lost. They had the partial shutdown impact of reducing capacity and having fewer people in the office, and they weren't able to get that walk-in traffic. So they qualified and received their money. With 42 employees, they got a little over $1 million. So we kind of give you these examples to spark your interest and help you think about the different things that may have happened to your company during COVID and how this can help you actually qualify for this today. And we do have 2 more years to qualify this. So for the full amount, it's about 1 more year because it'll expire in April 2024 for the year 2020. But for 2021, which is the bulk of the credit, you have until April 15th, 2025. So it is a pretty large period of time that people can still
louder.
Most of our business comes through referral partners like CPAs and accountants and other financial. You can move forward. Yeah, he said the speaker blew. So we work with almost everybody that we work with is a CPA or a finance professional who sends us all their clients, and then we give them a referral fee for sending their clients to us, and we get them qualified. So that's an opportunity beyond just getting it for yourself.
I'm gonna project, so I have a little bit of theater experience. I'm gonna throw this out there for everybody. We also have a referral partner program, so we partner with businesses in almost every industry. We partner with banks, we partner with payroll firms, we partner with CPAs, and we help bring this to all of their clients as well. And that also means any business can refer other business to us, and we have a program related to that, and it can create a stream of revenue for every business that we work with.
So there's one last way to qualify. If you started your business in 2020 or 2021 and you had W-2 employees, even if you didn't have any of these impacts, you can receive $100,000 just for starting a company in those last 2 years if you had payroll in 2021. So that's another way of qualifying, and that's a very easy way to get qualified. So the startup credit is another part of this as well. So
Try the mic.
yes, we're back. Okay.
All right, we're back. So, and we're going to talk about trust. Trust is a very key component, especially when we're working with the IRS. We work very closely with the IRS. Our filing partners headquarters is across the street from the IRS headquarters, and we've actually worked with them very directly, and we brought in a forensic accountant that's worked with them to create this process from start to finish to make sure that we're following the guidelines to the T. We're doing these filings in a very conservative way, and we're making sure that we're doing this in a way that is a blessing for your business and not a curse. So the way that we do this is also, it's a family operation. We run with integrity, we run with trust, and we do business different than a lot of companies that have kind of popped up in this industry fly by night and are probably not doing this necessarily the right way. We've been in this from the beginning, And we have a team of over 300 people with enrolled agents, CPAs, forensic accountants, and tax attorneys that are doing this for all of our clients nationwide.
Yeah, we're very focused on making sure on education, and that's why we speak at so many conferences, to help people really understand this and what they're doing and how they need to keep the records to substantiate their claims. So these are some of the highlights of why we would encourage you to choose our team. And we are able to go very quickly with this program because of our technology. Within a couple of weeks from your call, you basically would set up a call with one of our facilitators who would interview you, ask you what happened to your business during COVID, and then find out how that matches up with the regulations. And so after you do that call, you would just upload some documents, and then within about 2 weeks, you'll be filed. And then, so some of the people who don't have that kind of smooth system are taking up to 8 months to get you filed. So we get it done quickly. We have fair and transparent pricing. So it's either 10% if you pay 10 upfront, the portion of the fee of the credit that you're going to receive, or 15% if you pay when you receive the credits. So there's no upfront cost, and there's also no cost for the analysis. If you talk to some other firms, they actually charge you. They put you under a contract and charge you an upfront fee just to find out if you qualify. We do all of that for free with no obligation. So you'll actually know your number and everything about it before you make a decision. And you don't have to pay to get that done. We have 25 dedicated facilitators on our team that are here today. We walk you through the rules and help you figure out how you qualify. And then we also are there. We'll give you our personal phone number so you can call and find out, okay, what's going on? Why is this taking, do I need to turn in this paper, or what do I need to do? We make sure that we hold your hand to get you all the way to the finish line, and instead of just sending you a link to fill out. And the biggest thing is, of course, our track record. We've been doing this for quite a while, since the beginning, and we have completed over $5 billion in filings for over 30,000 companies successfully. So we know so much about this from doing so many of these that we can answer your questions and help with any specific situations that we might run into. So we're going to kind of walk you through the process just so you can understand how we do this.
So the step one is we do what is called a facilitated interview process. So basically it usually takes about 15 minutes on the phone, and in this structured interview we're going to ask questions about your business, and we're going to find out how you qualify, if you qualify, what quarters you qualify for, and whether or not you qualify for the normal credits or the startup credits.
The next step is we send you a secure upload link where you'll put in your 941 payroll tax returns along with your a payroll journal that shows who you paid, when, and how much. And we don't ask for any social security numbers or anything, just the numbers of the pay, the total pay. And then also PPP information, which in this case mostly does not apply. But if someone did take PPP, it gets subtracted out of the eligible wages.
And then from there, we're evaluating the documents. So our filing partners, typically on average, it takes about 2 hours of labor per W-2 employee worth of work. It's not an insignificant amount of work. And when the analysis is complete, we know to the penny how much your credit is going to be for. And then we're sending out from there the next step, I think, step 4.
Yeah, we do get about 15 to 20% more than some CPAs who do this if they don't really know it deeply, because we analyze every bit of wages, not just the summaries from the 941s. So we're able to claim a higher amount, also because of our understanding of all the different ways to qualify for each and every quarter. So after we're done with that, we send you the documents to sign, and then it all has to be done by hand on paper. You'll sign digitally, but our attorney has to physically sign every single paper and mail it in to the IRS right next door to our office. So that's kind of what goes on behind the scenes. And then and usually about 2 to 6 months is what it's taking now. It was taking 9 to 12 months before, but the IRS is under a lot of pressure to get this speeded up, and they're getting better. So then they will you get 6 letters saying that you've overpaid on your payroll taxes. And then usually within about 2 weeks, you'll get those 6 checks, 1 per quarter, for the payroll tax refunds, that is the ERC. So this is our contact information.
Yep.
we want to make sure everyone heard about the referral program. Let's go over that one more time when we have a speaker.
Yeah, just a quick reminder that we have a fantastic referral partner program. It's a very generous program, and basically the way that it works is any business that you send to us that we can help bring these credits to them. If they end up doing the filing with us, then 10% of whatever we make, we share with our referral partners. So it's a very great opportunity to create an additional stream of income.
And you can come see our team at booth 700, which is just straight down there quite a while. After all the exciting growing stuff, where we have a team of 9 people there and that are able to help and get you qualified and find out how your business can receive these credits. If anybody has any questions, we're happy to answer.
So I have some experience with the ERC and with another partner of ours. I'm in insurance, and I thought that because it was federally illegal, and I apologize that I did come in a little late, but are you able to get this for cannabis companies?
Yes.
And cannabis-related
Yeah.
companies?
Yes, so he's asking about because it's a Schedule 1 substance that marijuana cannabis companies are not usually eligible for federal funding type of things like this, and they couldn't get other things during the pandemic. But yes, we do have a slide just about that. I'll go back to it. No problem. So yes, it is eligible for those businesses because it's a payroll tax credit. It's not income tax. So the rule only applies to income tax, not to payroll taxes. And cannabis businesses pay their payroll taxes just like everybody else.
Thank you.
Sure. Any other questions? Yes.
Yeah, I mean, for small startups, when they, like on the East Coast, where there are a lot of new markets,
Yes.
there were a lot of startup businesses in 2020, 2021. I mean, maybe like a handful of employees. At what point is it really like the worth the effort? Like, how many employees is the critical mass?
Well, a lot of businesses will only take clients with over 10 employees, but we'll do it even with 1 because we want this to get into the hands of people who need it the most. So only 1 is required. And for the startup credit, even if you only paid 1 person during 1 week of 2021 in the last 2 quarters, whether or not you had any of these problems, you could still get the $100,000 credit, the startup credit. So we actually ask people to give us everything, so we'll look at both ways. So if you had 1 or 2 employees, it may be worth it to do the regular ERC or the startup credit, depending on the individual. They'll dig in and find out. But yeah, that's a really good thing because you don't have to really have done a whole lot to get that startup one. It's $50,000 per quarter for only Q3 and Q4 of 2021.
I'm sorry, you said it was 600?
700 is what? Yeah, over the 700. Yes, yeah, for sure. Yes, that's a really sweet deal. That startup credit.
Can you just give a basic idea of how you measure the supply chain disruption?
Yeah, so for supply chain disruption, we ask everyone to open a file and to keep on file everything about whatever it was that you used to qualify. Of course, P&Ls for revenue reduction. For all the other things, you'll just write down what happened. But for supply chain, we ask our clients to keep a list of where you used to get the things from. So you'll want to have this, because let's say it was plastic bags that you used to use for shopping. We used to buy these from Uline, and Uline is based in Michigan, and that is, we ordered them on May 1st and we received them on September 1st. So that would be an example of, you want to keep your invoices and your shipping records, which will mostly be on just an email. So just kind of print out all that, just like you would your receipts for your taxes, and know, as many things as you can think of that occurred that you tried to get and couldn't get on time. What it was, where it's from, the order date, and the receipt date.
So you're basically just documenting it. I'm familiar
Yes.
with the
Yeah, we
ERC,
don't
it doesn't
receive
have-
that. You just need to have it.
Right,
Yeah.
it's just a backup in case you're off or something.
Exactly, yeah, and we recently published an article for Bloomberg Tax. It's up there this week on their website about how to make sure your filing is audit ready. So we do, from the beginning when we speak with our clients, encourage them to have this file and to keep it on we tell you what to keep and what to have, so that you know that you have it. If you get asked the type of things you need to know that you have.
Any more questions? We have about 3 or 4 more minutes, so we've got time for maybe 1 or 2 more if anybody else has questions. All right, well, I think we are good. We're gonna be at booth 700 all day today. We've got all sorts of awesome candy and some great giveaways, and we've got a team of qualification specialists who are great at answering questions about whether or not your business may or may not qualify. But do keep in mind, about 80% of businesses in this country do qualify for these credits, and absolutely businesses in the cannabis industry will qualify for these credits. So please come visit us, and we can help you, your friends, your business owner friends, your network. We can help all of you find out and get these amazing credits for your businesses to grow and expand and recover from the pandemic.
Thank you so much.